Hi, this is Stuart Cooper with your mortgage market update for July 13th, 2022. And right off the bat this morning, dude, we had one of the biggest sell-offs we've had in quite a while. But I don't know if you were talking to me last month, this happened last month as well. But something very interesting happened today. But let's just talk about why we had such a huge increase in the 10-year Treasury this morning. And it was because of inflation. Inflation was forecast to be 8.8%. Last month it was 8.6. So this month it was supposed to be 8.8 and it was actually 9.1. So it was considerably higher than what was anticipated. Therefore, we got the sell-off because remember, inflation is mortgage rates' worst nightmare. Okay, that's what really pushes rates up. But it's kind of interesting because, last month when we had this happen, we saw the market jump up, but we didn't really get anything back. I mean, we did over time, over a couple of weeks, we had improved pricing for the next couple of weeks after a few days later. But something very interesting happened today. So within a matter of about 2 hours, we had a complete reversal of everything we lost, and we got it all back. And you can see it right here in this graph. In fact, let me just go to 2 days. But you can see the last 2 days. Look at that big run up on rates, and then things started to come back, and then we got a little bit better later in the afternoon. So we got everything back plus some. So that's actually it's counterintuitive. Why would rates get better when inflation is actually getting a lot worse? And if you think about it, it's simply because there is absolutely no doubt now that we're going to be going into a recession. The Federal Reserve is 100% going to be raising interest rates at the next meeting. It's either going to be 3/4 of a point or a point based on my expectations. I kind of hope they do a full point because they really got to get this thing under control sooner than later. But that's why. And because now that we know we're going into a recession, recessions are usually good for interest rates because there's a contraction in the economy, which takes the pressure off of raising interest rates. So that's why we got the little bump. So we're not out of the woods yet, but there might be some better pricing coming this Friday. And let me explain it to you. So here's the week's forecast. I'm not sure if you can see this. On Friday, retail sales for June are expected to be 0.8, and I think it's going to be worse. My personal opinion is I think that number is going to be higher than that. So if that's the case, then I think what will happen is we'll see some improvement in interest rates as long as we start to see that retraction in the economy. So that's retail sales on June, and that comes out on Friday. So we'll see what happens. But hey, if you like this channel, do me a huge favor. Please subscribe to my channel, like these videos, because my goal is to give you real good content about what rates are doing so that you can make informed decisions when it comes to your next mortgage. Hopefully you guys have a great week, guys. Hopefully this information is useful. And of course, if you have any comments or suggestions, go ahead and put a comment in there and I'll try to get back to you. All right. Have a great week. Bye.